Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M, as you know, is the first and only global virtual incubator accelerator headquartered in Silicon Valley with the mission of helping 1 million entrepreneurs reach $1 million in annual revenue and beyond, build $1 trillion in global GDP and 10 million jobs. This is entirely predicated upon your success. We are here because we want you to be successful and build really interesting, successful, sustainable businesses. Our philosophy of entrepreneurship is that entrepreneurship equals customers, revenues, and profits. Financing and exit are optional. So in the same vein that you can attempt to build $1 billion company, we also support your efforts to build $5 million, $10 million companies there are many more of those ideas out there than $1 billion ideas, and we believe that those are also perfectly worth building, and we will support you with whatever direction that you want to go. This is our 230th roundtable. We've been doing these for a long time. Over 25,000 people have been part of this series, and the event is being recorded. You will find it on our YouTube channel as well as on the blog. If you're live tweeting the show, please use hashtag 1M1M. Our Twitter handles are @1M1M and @Sramana. You can follow either. The YouTube channel is at 1M1M Roundtables, and recordings and all kinds of other goodies are over there. These are the call-in instructions. Right now, we are not ready for call-in. I will put this slide back up when we are ready for call-in, but you can make a note of the call-in number. It's 650-479-3208, access code 664-856-259. If you do call in, you must keep your phone muted until I ask for you. And let us know in public chat that you're calling in, because otherwise you're going to stream noise and echo into the call. So, this month we are in the midst of launching a new book, From eCommerce to Web 3.0, How to Leverage the Evolution of the Internet. This is part of our Entrepreneur Journey series, book 9 of the Entrepreneur Journey series. It's available on Amazon Kindle all over the world. You can download it either on the Kindle device or on the Kindle app and on any of the smartphones. It's an interesting book that basically features 15 successful e-commerce entrepreneurs who are sharing the tricks of their success and trade and brainstorming about the future of the internet, and I offer you some of my perspectives on what that future looks like as part of the book as well. So check it out, and as part of that event series, we have invited a bunch of very successful e-commerce VCs to share their perspective on how they see the e-commerce business evolving. So today it's my great pleasure to introduce you to Jason Stoffer from Maveron. Maveron, by the way, is a complete B2C VC firm. So Jason is going to be our guest today. We're going to spend the first 30 minutes of the show talking to Jason about all kinds of things. If you were here for our earlier session with Gus Tai, it's going to be a very similar session. And then we'll follow that up with our regular mentoring program of talking to entrepreneurs and discussing their businesses. Jason, welcome.
Welcome. Thanks so much for having me today. It's a pleasure to connect and to connect with all of with the organization that you built. I'm so impressed with what the past couple of years have brought to your organization.
Thank you. It's we actually connected right when we were getting started with 1M1M, and to some extent I really didn't know what we were going to do with 1M1M, how we were going to bring it together. So it was a very nebulous stage, and we actually featured Jason in our Seed Capital series. So some of you may have read his interview then. But Jason, over the last 4 or 5 years, has been very active investing in the industry. So let's start off, Jason, with your kind of point of view, and let's start with e-commerce. I know you have invested in other things, so we'll actually discuss your other investments and your investment thesis in more general terms as well. But since the topic is e-commerce, to begin with, let's talk about a couple of your e-commerce investments. What is your current thought process around the industry?
Well, I kind of look at e-commerce into first I look at the macro environment. And you have an environment where retail sales e-commerce sales are growing 15% year over year, while at the same time a lot of traditional retailers are suffering. So you see big comp store sale declines at places like Abercrombie, Barnes & Noble. You see Nordstrom's online sales up significantly while comp store sales are, I believe, down. You see Home Depot saying we're not going to open any more physical stores and we're going to be focused on growing digital. It's kind of an amazing environment and an amazing time for e-commerce, and the share shift is profound. So then the question for us is, and we're a consumer venture capital fund looking to invest in people who are building big, enduring brands. So the question becomes within e-commerce, where are the places where you can invest in young companies with potential to build billion-dollar brands? So we kind of bucket it into two areas. The first area is multi-brand, is e-commerce companies selling products from multiple third-party brands. So this is your modern-day equivalent of a Nordstrom's, a Macy's, or a Safeway, for that matter, across multiple industries, people selling other people's brands. So those would be a business like a Zulily, like a Wayfair. And I think, the important thing here is I think, we break this world into two parts. One is you're shopping with intent. I want to buy a green dehumidifier for my room. It's very hard to compete with Amazon in that regard. I think the other part is it's more like a shopping mall where you're walking through a Nordstrom's and you don't really know quite what to buy. So you want to be surprised and you want to discover things. So you could either have great personalization types of businesses like a Zulily where they're displaying items which they know you will like based on past behavior, or you can have a business like a Stitch Fix, for example, where there's a personal stylist who's helping you. Or you could have a business like a Wayfair, which is just, if you compare looking for furniture on Amazon versus Wayfair, Wayfair just has a much better user experience. So I think, what we're looking for are folks who are competing against, who are winning here by through better curation, through better personalization, and by not just competing head-to-head against Amazon with the same SKUs. So the second bucket of e-commerce businesses we're looking for is people who are creating their own proprietary brands. So I think the next generation of big retailers, your Lululemons, your Michael Kors, even your Chipotle, are going to start online and then move multi-channel over time. Online is just a much more capital-efficient way to reach early adopters and understand whether your brand concept has the ability to emotionally connect and has the ability to scale. So over time, I think you're seeing e-commerce businesses like a Warby Parker, like a Bonobos, moving offline, because I think you do need to meet your customers where they are and be multi-channel. But as a starting point, I think a lot of the next great brands are going to choose launching online as opposed to launching either via the traditional routes, which is either open your own retail stores or sell wholesale to other retailers.
Yeah, so I am completely in agreement with you on the potential for brand building and building really sizable brands using online as the first channel to go to market. There's no question it's much more cost efficient, much more doable, and much more bootstrappable in some sense, because to get to financing, you kind of have to show some traction, some formulation of your ideas, some coagulation of your ideas into some sort of a business, and to get to that point, it's much more cost efficient to do that using online channels. Now, you have invested in several e-commerce businesses. You discussed
Yep.
Zulily a bit, and Zulily has come up in our previous session with Gus Tai as well. I believe Trinity, Maveron are both investors in Zulily. Now, that was a company, or that is a company, that has really done a great job of merchandising and curation. And you know, that's something that I kind of feel is lost on people a little bit at least in e-commerce, the way it has been looked at for a long time. Everything was about price, everything was about logistics. But really, when you're talking brand, you're talking brand experience, you're talking discovery, that curation and merchandising is really at the heart of building a brand. If you're doing multi-channel or multi-brand retail online, it's all about curation and merchandising. And even if you're doing your own brand, it's all really about merchandising that brand in a way that appeals to people. So my observation is actually the venture capital industry needs to really get a lot more savvy and sophisticated about the discipline of merchandising if it really wants to play in this B2C brand world, especially in domains like fashion and design. It's all about merchandising and curation. Do you agree?
You know, look, I think the great retailers, I mean, look at like a Mickey Drexler. I mean, it's all about the merchant. I think online, it's not just all about the merchant. It's about this magical alchemy that takes place in combining the art and the science of retailing. And I think, you know, that's what we're looking for in investments. I mean, we have a new investment called Dalskill, which is an apparel business. And it's essentially, it's almost an online analog to what Hot Topic was back in a couple of decades ago when I was growing up. And, you know, a big reason we did the investment is you have a very strong data-driven serial entrepreneur who's sitting in the CEO chair. And we actually brought onto the board the woman responsible for Hot Topic's growth named Betsy McLaughlin. And when Betsy met the merchant at Dalskill, Shadi, Betsy said, you know, there's 3 or 4 merchandising geniuses every decade, and Shadi is one of those. And I think, you know, that's what we're looking for is this combination, this left brain, right brain alchemy between the data and the science. And I think, you know, between the art and the data. And I think, you know, it's just, it's very hard for a technology guy, so to speak, or an engineer. I mean, it's so typical to see a kind of male founder out of a big tech company who says, I want to start a fashion company using algorithms. And, I mean, there's a couple problems with that. One is they have no sense to how to merchandise the product. 2 is the vast majority of the purchasing power is female. And they need to build out a team that combines whatever knowledge they have around the data with the art of merchandising and curating products in a way, selecting and curating products in a way that customers love and relate to.
Yeah, absolutely. So the next question I have actually is about another e-commerce investment in your portfolio, Julep. It looks like you're doing a beauty product retail or e-commerce play. And let me just give you the context of where my question comes from. You know, I did a fashion company, one of the first e-commerce fashion companies actually in the history of the internet. That was right around the .com time. And my first major hire was the VP of merchandising out of Bergdorf at that time. This is, I'm talking 1999. Now, we were one of the very few fashion companies at the time, and it was a bit too early. Although we did get an acquisition offer from Ralph Lauren right away, I still, when I look back on that, I do believe that it was a bit too early to do that business. But at that time, there were something like 20 or 25, if not 30, beauty product companies, all trying to do beauty on the internet. And none of them actually worked really well. And part of what they found was that Estee Lauder owns 80% of the industry, and they just could not figure out how to navigate that business. So some things must have changed. I have not been following this industry that closely, so I'm very curious on what's happening in the beauty business and what is your investment thesis around that segment of the e-commerce portion?
Sure. I think you know, beauty has traditionally been a business which is I mean, the first generation of beauty really was the department store beauty counter and brands like Estee and L'Oreal, Chanel, et cetera. And I think, you know, the next generation of beauty and when value creation occurred was when a new channel emerged, which was television. And you had Leslie Blodgett at Bare Essentials and Christy Carlino at Philosophy, who used QVC and infomercials as a way to build billion-dollar-plus beauty brands by the entrepreneur connecting directly with their core audience. And once TV was established as a revenue stream, those brands going wholesale, and then in the case of Bare Essentials, opening retail locations. So I think what we saw with the emergence of the web is as the web proliferated, and as I think, you know, in '99 there was a big question of how many people would even shop online. And I think, you know, now that shopping is prolific and millennials spike, I think, you know, what we saw was beauty's this great social word-of-mouth business. And with the emergence of a new channel like TV before it, we thought there was a great opportunity for someone to introduce a vertically integrated brand which leverages social media in a way where the brand is built on the back of the community around it. And that was what brought us to wanting to invest in beauty. And I think, you know, so what stands out in beauty? It's very, very hard to start a beauty business. The reason we invested in Julep is because what we saw in the history of the beauty business from Estee Lauder onward was a history of very charismatic female entrepreneurs who connect with their core customer and innovate on products starting beauty businesses. And I mean, Julep's a great entrepreneur story where Jane moved here from Korea when she was 4. She didn't speak English. She applied to Princeton on a whim, got in, went to Princeton and Yale Law School, was an exec at BCG and Starbucks, and started a chain of nail parlors. And what she came to realize is post the crash of the recession that scaling and building a billion-dollar business of a national chain of high-end nail parlors was going to be really hard. But what was interesting at the time was that nail care was a very fast-growing category. I mean, you saw it with OP exiting for $1 billion. And it was also a very social category. So nails became kind of the new accessory where people would change their nails as they changed their outfit. And Jane thought that was the perfect beachhead in which to launch a online e-commerce business. So she launched the business based on nails. We invested under the thesis that once you capture women who are compelled by new nail care offerings coming out every month, that you can use that as a beachhead to capture a greater share of wallet across multiple beauty categories. So we invested first about 3 years ago. We put a little bit of money in when they launched online, led a Series A, and then, you know, since then, folks like Andreessen, Azure, Madrona, Leslie Blodgett even invested in the last round. And we're really excited about the business and about its potential.
Now, let's switch topics a little bit to look at some other categories that you tend to invest in. You like to invest in education, it seems, online education. So I saw that you've invested in Course Hero. Andrew Grauer is somebody we have done a big story on, and I love what Course Hero is doing. Basically, course notes, and huge numbers of college students are hanging out on Course Hero, both sharing course notes and using course notes that are available on this platform. And it's what I like about the business is that it has a very clear monetization model. It's not some foo-foo, let's build a lot of users and somehow or the other magically it's going to monetize. These kinds of businesses I'm not crazy about. I like monetization models, so I love the fact that Course Hero is essentially a subscription business. A very large number of their users are subscribing, paying real money. So, and Andrew bootstrapped that business for a long time. I think it was already about what, $10 million before they raised money or something like that. So
I think he bootstrapped it for a while. He raised a seed round, which we led. And then, he just kept growing it. It's one of these businesses where we would have loved to lead a Series A financing, but, I think it's a case study for entrepreneurs out there about, Marketplaces take time. They have a natural rate of growth.
Mm-hmm.
You can try to force it by spending a lot of capital against it, or you can be less dilutive, take a longer-term outlook. And, I think you're at a point today where Andrew owns a heck of a lot more of that company than most entrepreneurs do at the stage he's at. Value accretion year over year is high. And, he's been very scrappy in building the business off of very little investor capital. And it's a perfect case study of an entrepreneur puts their head down. They don't spend a lot of time talking to TechCrunch. They don't spend a lot of time at conferences, and they just build a great business.
Yeah, that's kind of the way I like to build businesses, and I think we, philosophy-wise, we definitely advise our entrepreneurs to bootstrap first, get some validation, get some valuation, and then raise money. It's a lot more sound approach to building businesses. So what is
I don't think there's a right way or a wrong way. I think we kind of look at the world, and our lens is different, right? I mean, for us as a consumer venture firm, there's typically 4 to 5 businesses a year that are started that are venture backed in the U.S. that end up being worth $1 billion. Last year there were 12. So is it a new normal? I don't know. What I do know is we're looking to invest over the investment period of our fund in those billion-dollar businesses. So for us, sometimes you're able to invest in future billion-dollar businesses with a very capital-efficient entrepreneur up front, and sometimes either the idea or the entrepreneur don't lend themselves to capital efficiency. So less of a focus for us, but as an entrepreneur, I think it's something to have a very deliberate thought process around.
Yeah, that's exactly right, because our perspective is more the entrepreneur's perspective, not so much the VC's perspective. We have a portion of our portfolio that is venture scale or venture style companies, but we also have a very large portfolio of businesses that will, at least right now, they don't look like they're going to be venture style companies. So, and as a result, we have to, practice methodology that people can, be successful with or without venture capital. So actually,
and I think it's interesting. A lot of the wealth in the U.S. or globally is created by people who have a family business that's doing 80 in revenue and spitting off 12 in cash a year.
Yeah,
and if you make prudent financial choices, you can create an incredible amount of wealth over a multiple decade time frame with that kind of business. That kind of business is not one that venture capitalists get particularly excited about.
Yeah, if you look at the book, actually, there's a case study called What You Want. This guy was an eBay seller, and he says, me, myself, and I. He built a $6 million business from his closet. He was putting inventory of these expensive luxury watches in his closet and selling $6 million worth of merchandise, very profitable. And then he has scaled that business without any outside capital, actually. He scaled it to $20 million. So
yep.
This book is actually full of these kinds of stories where you see very, very interesting. And e-commerce is a category where you can do that. By the way, in online education also, we are seeing a lot of bootstrap businesses, very successful, very well-crafted bootstrap businesses. My question, Jason, is what is your investment thesis around online education right now?
So I don't really view education as online or offline. In fact, I think the biggest area of opportunity in education is post-college. I think, what you see is an environment where when I graduated college in '99, it was very easy to get a job. You just went and you got a job at a consulting firm or a CPG firm or an investment bank. Today it's very different. It's very difficult. So not only is it hard to find your first job, but skills change so quickly. So you might need to reinvent yourself 5, 6, 7 times throughout your career. So the area I like a great deal is how do you train post-college to gain the skills the workforce demands. I think it's really telling that unemployment is such a big problem for college graduates. However, at the same time, There's every board meeting I go to, there's constant complaining about the lack of qualified people in areas like data science, marketing analytics, web development, UI, UX, et cetera. So I think the modality of the education, online versus offline, is much less important than the outcome of the education, which is, I like education businesses where you can either be better skilled to do your current job or get a new job as a result. I mean, one of our most exciting investments now is a business called General Assembly, which is a global network of campuses, which essentially is teaching 20-somethings. They're offering certificate programs at price points of around $3,000 to $12,000 in things like web development, web design, data science, digital marketing. And on the back end, the students are getting jobs at places like Bloomberg and Dropbox and Time Warner. And taking a 3-month program at that price point is serving as an alternative to grad school to a great extent. So, why spend 2 years in grad school when you could go through a 3-month program with a more relevant curriculum and get a job on the back end at the same place you might have gotten a job at if you had gone to that long, expensive grad program? So I think you're seeing a breakdown in the value proposition of graduate school, and you're seeing opportunities for folks like a General Assembly or folks who offer online training like a Pluralsight or a Lynda to step in and retrain people in a way that's less clunky, more agile, and much less expensive than college or graduate school.
Pluralsight is doing very well. We've had a big story on Pluralsight, and in fact, they had a competitor called TrainSignal. They do the same thing. By the way, folks, Pluralsight, TrainSignal, these guys are essentially doing online training of technical skills, all sorts of programming languages and related stuff. And these companies, Pluralsight was a bootstrap company out of Utah, and they had bootstrapped to, I think, about $16 million in revenue. Don't remember exactly. And then they raised money, acquired one of their top competitors, which was TrainSignal, and are rolling up the category and are growing very, very well. So in general, I think what I'm hearing from you as well as other people who are looking at online education or education in general is people like to invest in adult education or, basically B2C education businesses where the decision of purchase lies with the user. So if it's adult education, that's very, very good because the person who is going to be buying the product is actually paying for it and going to be the user, as opposed to K through 12 where the parents buy and the kids use, and that's a more cumbersome process. A lot of school decision making is involved and so forth, whereas adult learning operates very much like a regular B2C e-commerce or B2C service kind of business, and that's a subscription service kind of business, and that's from a sales cycle point of view, from a customer acquisition point of view, these things tend to scale a lot better and operate a lot better in terms of.
Yeah, and I think it's notable that the two education IPOs in the past 12 months of growth companies were 2U, which essentially it's a platform to offer online degree programs for top-tier universities like North Carolina and USC. Nice IPO. And the other is Nord Anglia, which is a chain of, essentially it's like expat schools, so those schools for expats in Amsterdam or China or whatever it might be, with people or corporations paying out of pocket. So I think, I think K-12 businesses are very hard, especially in the U.S. I mean, you're selling into a channel which has increased budgetary pressure year over year, and there's just not a lot of spend. I think on the post-secondary side, selling to institutions, you're on this annual sales cadence to sell into schools. It's just really, really hard. I think the other way to slice the business, Sarita, especially in the U.S., is people who can pay and people who can't pay. And I think, there's places you could do societal good, which is kind of on the bottom of the economic pyramid, and the places where clearly you can make strong returns on capital is more towards the top of the economic pyramid. I mean, I think it's telling that the two IPOs, 2U and Nord Anglia, are both target individuals largely at the top of the economic pyramid. And I think, you know, the challenge we face, and I saw this with the business Altius I invested in, which was shut down by the U.S. government. It was dependent upon federal funding, federal Title IV funding for students to get financing. And even though the results were 50% better than, from a student outcome perspective, than comparable public community colleges, the government decided to shut it down, just given kind of the regulators' largely dismissive attitude towards for-profit institutions. So sadly, what you have is a federal government in the U.S. which is broadly opposed to using federal funding to enable lower and middle income students to gain access to education, regardless of the quality of the education. They just have an issue with the for-profit world. So what you end up doing is you target people who either themselves or their employers are able to pay.
Right. Yeah. To build a business, you have to find customers who can pay, and that is the bottom line of building a business. You cannot. Business is not charity, and giving things for free is not a business. That's just.
I would say though that I think that the government in this case is acting in a way that doesn't make much sense. Kind of saying if you're a for-profit player that offers a better price-value combination than the nonprofit player they've been funding for 50 years, they don't care, and they're still going to favor the nonprofit player. So I think, I mean, government sources of financing can be fickle, but I mean, there's great big businesses. I think look at like a Palantir, where a good or a SpaceX, where a big portion of the revenue comes from government sources. So I think you have to add that into the mix.
Yes, and absolutely, that's fine. But if you're, I think from a decision-making point of view of your business strategy, if you are waiting for for government policy to change for your business to be successful, I would be very careful about those. Although,
don't do that.
And Lyft and Airbnb are playing that game to some extent. But if, in education especially, if you have to change government policy for your business to work or scale, that's a very difficult territory to wade into.
And if you're dependent on regulatory approvals for financing or operations, you just got to be careful.
Too risky. Jason, thank you so much. I want to be respectful of your time, and thank you for spending the time with us. Hope you'll come back at some point, and we'll keep in touch.
My pleasure. It was fun. Thanks so much.
Bye-bye.
Bye.
Okay, folks, we are going to start the entrepreneur mentoring piece of the program with Ajit Narayanan. Ajit is actually a premium member of the 1M1M program. He was supposed to be in our private roundtable yesterday and got late because his train was running an hour late. So Ajit, you are up first.
All right. Hello, Samana. Can you hear me?
Yes. How are you?
I'm doing great, Samana. A great deal of crazy travel, but I guess that's par for the course for an entrepreneur chasing success. So I guess I'm doing well by that measure at least.
Good.
All right. So I wanted to talk to you about a strategy that I've been contemplating for quite a while now.
Okay.
To give you, perhaps just to introduce myself to the folks at the roundtable today, I run a company called Invention Labs, and we make a product called Aavaz, which is an app for children with special needs, mainly children with autism, and this app is available on the App Store. We've also invented a technology called free speech that we think disrupts the way that people use language, and that's something that we've been working on for a while as well. I've been a member of the 1M1M premium program for I think 3 years now. Derived a great deal of value from it. Samana helped me raise my seed round of funding about 6 months back, and I'm here to talk about the next round of funding, which we want to raise, Samana, in a short while of time, I guess. Samana, I think the main thrust of what I want to talk to you today is that we have enough money now to last us maybe for a year and a half. just because we're making money from Aavaz, and we're also we are using our investor money quite efficiently. I've given a lot of thought to this, and we've spoken about this in the past as well. But I think I'd like to make a very strong pitch for a free speech-based, Series A pitch to see if I can raise more money around that. This is for a couple of reasons. One is just personal, because I think free speech is this technology which is potentially so disruptive. But for us to look at it as an offshoot of Aavaz, I think it's going to take a substantially higher amount of time than just to make an app, release it, and see if it flies. The second thing is I'm also seeing, when I speak to my own investors, the sense I'm getting, of course, it's a rather small sample size, but the sense I'm getting is that excitement about a niche industry like autism or special needs, even if there's great traction, any kind of funding that we may be able to get for a Series A is likely to be from either an impact investor or not at all. Whereas a technology like free speech, which is much more broad-based, I've been told that there's a much higher chance that we'll be able to raise money on the back of such a huge total available market. So I'm going to run kind of a pro forma business plan by you. A lot of the pieces in this are missing, and I'm hoping that in this call you can give me some insight about what you think the biggest holes are, so that I can see if I can come up with a strategy to fix that in the next year and a half before we run out of money for our next fundraise. So this is the executive summary. Entering the language teaching space with a very strong team, with expertise in taking an app to market through the App Store, and looking to raise $5 million Series A or something like that. I mean, like I did the last time, I pretty much followed your template to the letter. So we can quickly go through the slides. This is the team. Since I raised my seed, I've been able to get a head of marketing on board as well, and now this is the triad that I think you've spoken about, the guy that builds the product, the guy that sells it, and me, who raises the next round. So we've got a little bit of depth in our product team now, and hopefully when we go out to raise money in 6 months or a year or so, that this team will actually have results to show for it. The next slide is about the product and free speech. So we haven't launched the free speech app yet. We've only got a prototype. But this is the idea. We want to say, this is the only app that allows you to learn a language and use it at the same time. Every other app that's in the language teaching space right now, you learn the language, and then after you've finished learning it to some extent, you start using it. What we are positioning ourselves as, or what we're planning to position ourselves as, is that from day one, let's say you wanted to learn Japanese. From day one, you can begin communicating in Japanese, and as you communicate in Japanese, you will also pick it up. And so we're saying that this is going to be much less investment of time and also much more efficient as a language teaching mechanism. We're hoping that by the time we start raising funding for this, we will have launched in multiple languages, and we will have a certain number of users, a few tens of thousands or perhaps even 100,000 users. So that's the hope. On the other hand, we have Aavaz, which we will position as something that's bringing us a certain amount of revenue every year and therefore reducing the financial risk, but also really as a proof that we know what it takes to take an app to market B2C. As you know, we are pivoting to a B2C model in Aavaz, and if we're able to show some traction there, I put that number 30,000 there as a placeholder, but if we can get to that number in about a year, then we say, okay, we understand how this marketplace works, and we have this idea that's going to use that marketplace to go to $1 billion, industry.
But currently, Aavaz is not a B2C app, right? You're selling through schools and therapists, isn't it?
Yeah, that's correct. But we made the shift.
By the time ready on the financing, you propose to pivot that app to a B2C app and show a certain amount of revenue traction as a proof of concept, proof that to show investors that how to do a B2C app on the App Store.
That's exactly right. That's exactly right. Yeah. On the next slide, I'm talking about the free speech difference, and this I think I'm not going to go into this in detail, but the idea is that you can start communicating in the new language from day one. The next slide is really answering that critical question of what the TAM is, and I think this is the most important thing. If we can crack a new way of language learning, which is more hands-on, which is more fun, and which is more efficient, we're talking about $100 billion market just for the second language learning space. And given our experience working with kids, we could potentially augment this with another $100 billion market for the first language learning space, for kids who are 3 and 4 and 5, apps for them and stuff like that. And much of this is in Asia, so the fact that we have Indian roots could potentially serve as a big boost for this. And a lot of it is English language learning, which is where free speech works really well. So, this is making the case for TAM. But I mean, language learning, everyone knows it's a huge TAM, so I'm hoping I don't have to make this case very strongly.
Yeah, but where you have to make a case is where are you positioning? Because as you know, I don't believe in top-down TAM. Investors don't believe in top-down TAM. Where in this $100 billion market are you positioning is going to be an issue. You cannot do all of these things at once. What is your product roadmap? What is your go-to-market strategy around that product roadmap? Which segments are you going after? What is the size of those segments? And what is the competitive landscape around those segments? All of those are issues.
Okay, yeah, I take that point. But I'm curious, Ramana, when I look at my competition, I have a slide about that later, but if I look at my competition, apps like Duolingo, apps like MindSnacks, these are companies that, they say language learning, full stop. And I know that for a fact that, apps like MindSnacks are being used just by anyone who needs language learning expertise, not just children, not just travelers, not just business, but it's more of a, horizontal play than a vertical play. Does that qualify as a segmentation in your opinion?
No, I think so if you're, depending on where you're going, if you're looking at travel, Rosetta Stone is going to be it, right? So what is Rosetta Stone's online app strategy? What apps does Rosetta Stone have out there? What are those doing? How are you positioning against them? Pimsleur, in case of general, adults learning, Pimsleur is a very, very effective and a very credible player in the market. How are you positioning against them? So it depends on which segment you go after. So as you flesh this out, one of the key works that you're going to have to do is to do very tight positioning and TAM analysis for those segments. Whichever competitive positioning and TAM analysis are going to be critical to work out the product roadmap here.
Well, so let me give you an example of an application that we're thinking about around free speech. The idea is that you learn language by connecting with people on Facebook who speak other languages, right? So let's assume that, you are a native Chinese speaker, I'm a native Hindi speaker, and we connect on Facebook and we're able to exchange, we're able to have conversations in each other's languages, and that allows us to learn those languages. So I'm not pitching this as a specific idea, but I'm pitching this as an example of how I'm thinking about positioning. How would you even begin to think of positioning of something which is, B2C, with a social component and with stuff like that? Do you say, I'm targeting 18 to 25 years, is that the way that you would go about it?
Consumer brand building, consumer marketing, you have to really craft the persona that you're going after. Who's going to have the time to do this? Kids have time, don't have money to pay. And this that I've told you before, and we just discussed this with Jason, right? The industry, the funding industry wants to fund B2C businesses where the user is the buyer. So that rules out children. You know, the minute you introduce children into the picture, the user is no longer the buyer, the parents are the buyer, there's all sorts of indirect B2C decision making going on. And right now, generally, investors do not like that. So if you're going in the adult learning industry, which is fine, then that falls into the category of, you know, what kind of adults? Is it adults that have just graduated college and are, you know, trying to do something? Is it travel-related things? Is it business-related learning? Where do you want to position? And accordingly, you have to figure out what is the social behavior that is going to follow in that category. And what is the competitive landscape in that segment, in that category? Make sense? Ajit? Did you get this?
Can you hear me, Samana?
Samana,
can you hear me? Hello?
Now we can hear you.
Okay. Yeah? Okay. Now, I said on my next slide, you know, I talk about the annual revenue per user being something like $5, right? At a number like this, really, I'm trying to make a pitch to the VC, which sounds like you know, like an Angry Bird, for lack of a better example. I'm just wondering if it is even possible for me to look at any kind of narrow positioning with a business model which is just volumes with low monetization per user. You know, any kind of segmentation which, I mean, just making an app that appeals to the lowest common denominator might be the way to increase my install base, right?
Yeah, but see, I don't believe in. It's extremely difficult to get people to download apps these days. Right now, if you read all the reports that are coming out of these, you know, the analysts, everybody's saying that the number of app downloads has gone down dramatically.
I see.
So people have already got the apps that they've got, and they're kind of sticking to those. Which begs the question is that unless you're doing something really compelling and really catering to an audience who wants to do something and you're helping them do what they want to do, it's going to be hard to get mind share. And kind of like spray and pray is not something that is going to get you very far.
Right. So, Samana, you know, maybe I'll do some more homework and get back to you at a future roundtable. But I'm wondering if you can, you know, just as a closing question, can you point me in the direction of case studies or things that I should study about for how B2C app businesses have been successful, either in raising funding or scaling up? Because that's really what I want to be, a B2C consumer app.
One of my favorite case studies, and it's in the curriculum, is Text Me.
Okay.
Text Me is the way I like to build businesses, which is disciplined and with a monetization model in sight. I'm not saying that this is going to be your monetization model necessarily. It may not be. But it will show you the thought process of the business building of an app business.
Okay.
So look at Text Me. Let's take that as kind of your anchor case study and build around that. And then the other thing that I would like you to think about is to kind of rule out going into the children's space and take that out of the equation and focus more on the adult education space.
Okay, that's interesting. Okay,
so because we want the buyer to be the user. If we're gonna have to raise money, I would like you to work on a business plan that is where the buyer is the user.
Okay, that's very interesting to hear, Samana. So anyway, I have a lot of work to do, and so I'm going to take this pitch and I'm going to refine it with the inputs you've given me, and then I'll pitch it again to you at a roundtable pretty soon. So that's about it from me today.
Sounds good. This is, I think, a productive discussion, actually.
Yeah. Right.
Okay.
Thank you, Samana.
We'll talk soon. Let's move up to Sarita Mishra. You are up next.
Yeah. Hi, Shamana. This is Sarita. and I think it's nice to be here. I did hear you a couple of weeks back on this roundtable. It was interesting. And so should I start, or would you like to say something before that?
Please go ahead with your presentation.
Okay. So we are Green Cosmos Energy Solutions, and we have built energy analytics and sustainability solution with solar integration decision support. It's built on SAP HANA platform and hosted on AWS Cloud. In 10 months, we could actually develop, in fact, design, concept, and develop the solution, and got it certified, powered by SAP HANA. It's listed on SAP Marketplace. It's also listed in SAP Application Development Partner. And so this is basically with the rising energy costs, industries, all multi-site businesses, industries, manufacturing units, business organizations, they now feel the crunch, at least depending on the business, the percentage of expenditure on the energy is somewhere between 2 to 20%. So once they actually have a deep insight into the energy consumption pattern, they can actually make intelligent decisions and cut down the energy costs. That is one thing.
Here. When you say they, who's they? Are we talking about facilities? Are we talking about corporate facilities? Are we talking about commercial real estate? Are we talking about colleges, universities? Who's they? Who is the customer that you're targeting?
Yeah, so these are basically industries. Any multi-site business would be one, which is cross-industry. It could be hospitals, like one of our customers right now is a chain of hospitals. It could be a chain of educational institutions. Companies like, Walmart, Zara, manufacturing, auto industries like Honda, which has manufacturing units in different countries. So basically, energy is used by every industry. And all of them, and now smart meter is almost mandatory by almost all the governments, more so in Europe and US. India is still picking up. So this is basically it's cross-industry, even utility industries. The power providers can use this because the smart meters are integrated to our server, and the data is imported directly. Based on the model built, it's analyzed and shown in real time, the result of analysis. Plus, you get to forecast. So depending on, say, today is Thursday, 8 p.m., what would be your typical energy consumption for your facility? So if it's below or above, an SMS alert will be generated to the facility manager so that adequate action would be taken. So that is what basically this software does. And in addition, this also helps industries make a decision regarding their solar integration, because renewable energy now, is a must. Plus, solar energy is something which can actually provide, the maximum amount of energy to replace fossil fuel energy, and it's unutilized in a lot of tropical countries. So here there is a separate, faculty for the decision makers to decide on what efficiency decide on the efficiency of the panels, on the square meter of the panels, and the forecast of solar energy on a typical day. So based on that, they could actually make use of differential pricing to buy the amount of electricity. In some months, on some days, actually they could use net metering to get credit for substituting the conventional energy by solar energy. So this is what basically Realmatics does, and it is all automated in real time by means of an interactive dashboard.
And Sarita, do you have questions? Do you have customers actually? Before you go to questions, let's talk about.
Yeah, we do have a chain of hospitals. We just got into sales and marketing since June. June we got certified. So June we started our marketing. As of September, we have a chain of hospitals, and there are a couple of them in the pipeline. Yes, negotiations are going on.
And where are these hospitals? What country are they based in?
These are in India.
In India. So
These
you
are
are
in Bangalore, in fact.
primarily in India?
Yes, we are in India.
Okay. And what is your goal? Do you plan to build this business in India? Are you trying to go global? What is your strategy?
No, we want to go global. In fact, there is more market in UK, Germany, because UK it's mandatory to have smart meters. See, basically the beauty of this solution is that it can handle terabytes of data in less than a minute, actually in few seconds. So that is how we are able to generate the analysis results so fast. Here we have limited number of smart meters. Still we have gone to now we have gone to one of those terabyte level. But like in countries like UK.
Have you figured out the pricing hospital chain that you have brought in as a
customer? Yeah, we actually did. Yeah, in fact, because this was our first customer. So this pricing is, I mean, we have not really given them a very high price, but it's able to cover our cost. It's something like in Indian rupee, I would tell you. It's like one-time modeling is around 76,000 rupees. And then for per month, per location, because this is for a multi-site business. So this typical hospital has almost, including the educational institutions, they have like 25 hospitals plus educational institutions. So we have given them 43,000 rupees per month per location. Once they exceed 3 locations, then it's revised to 36,000.
Okay.
So that is how we are doing right now. Maybe with the next customer, we have to work out again.
Okay, so it's some sort of an annual subscription fee kind of model is what you're using.
Yeah, right. It's an annual subscription model. Yeah. And as you use, basically it's based on cloud. So what advantage the customer sees in here is that the customer needn't actually invest in hiring technical skill or in data servers. So we are doing all that, even analytics team. So we are doing all that, hosting on our server and our cloud. So they pay as they use.
Yeah.
So that is the advantage they see. But
you're stating on the side that you have an investor. So what kind of money have you raised?
No, I don't have an investor. Basically, co-founder is Gautam Mishra. So he's my husband, and our savings are what we have invested in this company for the development of the product. And he's co-founder as well, yeah.
Okay. All right. Okay, let's go to your questions.
Yeah, so Shrama, now that, I can see there are a number of, software, energy software which are available in the market. In fact, according to the listed ones on Capterra, there are almost 141 energy management software. And but so that's not scary because market is also growing hugely. Verdantic says the market is going to grow to 514 million in 2019. Market is huge, but
a 500 million market is not going to support 100 vendors. That's too many vendors for that market. A lot of them are going to get shaken out.
Oh, is it 500 more 14 million by 2019? That's what it says.
Small market.
Oh, okay. I thought this is big. Okay.
So
yes, but there are one. Yeah.
So I think that is kind of the question that you need to really nail is how are you going to compete in a very crowded marketplace? Energy management software is a very, very crowded marketplace. And then there are other things happening in the industry right now. If you look at Internet of Things is a very big thing in the energy management area. So a lot of what's happening in these facilities, at least in the modern more advanced countries, is Internet of Things are being positioned in these facilities, and they are going to, coupled with the sensors and the software, they're going to automatically modulate and optimize energies in the facilities. So that really is where the investment is happening. If you look at that category, that's where a lot of investment is happening right now.
Mm-hmm. Yeah, so I thought this one, because if it's hosted on cloud, this is hosted on cloud, and it's an automated, analytic and interactive dashboard. So I thought, yeah, it could, attract investments.
That is not sufficient. If you have 100 companies in that space, how you position competitive is something that you're going to need to figure out. Anyway, I'll be happy to help you further. You have a lot of work to do to make this company, you've got a technology, you've got a first customer, which is great. So you need to definitely continue to get customers. But if you really want to scale this, you have to figure out exactly how those pieces come together. We'll be happy to help you. Why don't you hang on and listen to the rest of the show. Towards the end of the program, I will cover how we work with entrepreneurs. And in fact, we have a partnership with SAP HANA. That's just FYI. I will explain to you how 1M works. And so let me finish working with Aaron, and then we will talk about that.
Sure. Yeah.
Aaron, you're up next. Please unmute your
Morning.
line.
Thank you for having me.
Go on.
All right. That was pretty straightforward on the surface anyway. I'm here to present R Pickup, a residential and commercial junk removal service. We recycle, resell, reuse, restore, repurpose, donate, and ultimately reduce the millions of tons of waste that are dumped into landfills each year. I could talk in pretty great detail about the current state of our planet. It's not a secret that our Earth isn't healthy, but I only have 3 minutes, so I'll jump into how R is contributing to the cleanup. My vision is to see every one of my customers recycling, composting, donating materials instead of trashing them. Trash bills can be drastically reduced this way, and that's certainly bad news for the waste industry. My model positions me.
Aaron, for this session to be productive for you, I think we should focus on how are you going to build a business out of this. I think nobody has any argument on your premise that people should recycle and so forth. So everybody agrees with that. How are you going to build a business on this premise?
All right. Well, I cut the cost of removal services to homeowners, landlords, realtors, realty companies, property management companies, auction companies, local governments in the cities. Bank foreclosures are a big one. Construction companies, people who rent, real estate investors, lawyers, apartment complexes, thrift stores, companies going out of business, among others. We can offer these services at a low rate because we sell many of the materials through a network of consignment auction houses, antique and collectible shows, consignment shops. A big thing is eBay. We also do a lot of Facebook sales, Craigslist, Etsy, Pinterest, pawn stores, scrapyards, recycling centers. It goes on and on. We also have Art Broker's Salvage Resale website, which we're launching. At Art Broker's Salvage Resale, that's responsible for most of the sales of the salvage materials from the jobs. This department also creates upcycled materials, restored and repurposed products for selling on various websites. The Salvage Resale site markets mainly to interior designers, artists, garden designers, contractors, collectors, and do-it-yourself types. At that site, you'll find scarce antiques and decor and quality building materials, things that can be reused, bricks, stone, and barnwood, things like that. R Pickup is mainly responsible for the removal, the sorting, the shipping, the drop-off of recyclables, and delivery of donated DVDs and clothes and food and household goods. Those go to their respective places. Now the competition here. Sure, yeah.
That you're already doing?
It is currently, yeah.
Do you realize that there is, for all the things that you're proposing to do, there is a gigantic logistics operation involved, right?
Sure, yes.
How is that going to come together?
Well, using our box trucks, our vans, most of the things that I guess communications-wise, we use Instagram, text messaging. We use certain...
So, but that's the customer acquisition piece. What about actually delivering the service? I mean, how are you financing all these trucks and the employees who are going to drive these trucks and pick all this stuff up? It sounds like it's a very, very large people-driven operation.
It is.
Operation.
Sure. Now it's at a small scale. I currently have one 18-foot box truck and one cargo van that we use. The cargo van's for smaller or medium-sized jobs. The box truck's used for bigger jobs. It is small, and that's what I'm hoping to do is to scale this up.
Okay. So I think what my advice would be to model it with one truck and one location, whatever location you're in, and wherever it is convenient for you to make this come together. You need to understand the economics and the logistics and the model of how this business works, so that if you want to scale it, and if you're looking for investors to scale it, you're going to have to show them what are the unit economics of customer acquisition, of delivering a job, how much can you charge for it. All this needs to be fleshed out before any investor would be interested in the business.
I currently do have the details on that.
Okay, I don't see any of that, so it's hard for me to comment on it.
Sorry, yeah. I guess what I'm getting at is I currently do this. I've proven it to work. It's profitable. And I guess I'm just kind of looking for some insight in how to move forward, I guess.
So why don't you hang on then? I will explain to you how we work. And you're basically going to need to learn how to build a startup. And that's exactly what we do, is for people who have not done it before, we teach you how to build a startup and how to, and if it's a fundable business, we teach you how to raise funding, and we introduce you to investors and all of those pieces. And we also teach you the diagnostic methodology of how to figure out whether your business is fundable or not, or how to make it fundable if you want to make it fundable, and blah, blah, blah. So that's why we're here. So if you hang on for a second, I will explain to you all of those elements in just a moment.
Sure. Thanks for your time.
So, folks, if you like what we're doing here, my humble and sincere request to you is please refer serious entrepreneurs to 1M1M, because we cannot do what we want to do without serious entrepreneurs. People who are looking for instant success, overnight success, that's really not our segment of entrepreneurs. We are very realistic about the fact that it takes many years to build a successful company, and as a result, it's very important for us to find serious entrepreneurs who really want to do it and put in the work to build a business, to be part of the program, and that's the only way we will be able to, help build that much value with you. So here's an overview of how we work, and you can decide if we are the program for you. If you decide that we are the program for you, you're most welcome to join the program and use its resources, which are: you start at 1mby1m.com. That's where everything begins and everything is available. We have a phenomenal blog, which has got really great content, and just by following the blog, you'll learn a lot. We also have the Entrepreneur Journeys book series. There are 9 books, actually 10 books. Entrepreneur Journeys has 9 books. The 10th one is coming out in October. Each of them focus on a specific topic, and you can basically, these are quick read, case study based books that give you a very quick but very in-depth, actually insightful, in-depth overview of that particular topic. That's a very good entry point into the 1M1M program, actually. Then this is what the website looks like. We have lots of videos. You can look at in the process of understanding the program and deciding whether this program is for you or not. Please go ahead and review the video FAQs, and that's going to answer most of your questions. We have these free roundtables every week. So we have one more in September, and all of October we have roundtables. So please feel free to use those as and when you need to get coaching and input. The free public roundtable page on the website has the roster and the registration links and everything. Then we have the 1M1M Premium program. That's a $1,000 annual membership fee for unlimited usage of a variety of different services. We offer you extensive methodology guidance. We have fantastic curriculum. We help you with business development, introductions to customers, channel partners. We help you with strategy consulting, similar format, but members-only private roundtables. We help you with financing. If you get to a point where you are ready to be introduced to investors, we will introduce you to investors. In certain geographies, we have a lot of investors. In certain geographies, there are fewer investors. But we are well connected into the industry. So in certain geographies, in one afternoon, we can introduce you to 35 investors, and you can get going. In a lot of geographies today, there is not as much of a seed capital ecosystem, so that those tend to move much slower. And we have a lot of clout in the media, so we help you with getting coverage in the media as well. The $1 Million Club is a set of case studies of our success stories. The 1M1M value equation gives you an ROI analysis of the 1M1M program, which is $375,000 plus 5 to 10% equity worth of value for just $1,000 a year. We do not take any equity. We're the only incubator in the world that can give you that much value without taking any equity whatsoever. So that you basically have a very entrepreneur-friendly term in which to get help. We give you lots of orientation material. 1M1M self-assessment is one that we recommend that you put your own business through so that you start asking the right questions and answering the right questions. That will help you move forward. There's tons of material about the premium program, what to expect from the program and so forth. Lots of video FAQs that will help you evaluate. The curriculum is organized into two parts, core and electives, and these are case studies and video lectures driven. The core curriculum has 7 modules: bootstrapping, positioning, market sizing, customer validation, positioning, customer acquisition, and team building, and lots of sub-modules in each of those categories. And then the electives, we actually have launched a lot of new electives: Web 3.1 e-commerce, cloud computing and business solutions, outsourcing and consulting, mobile and social apps, healthcare IT, online education, gaming. Then we have specific new categories for women and entrepreneurship, building unicorn companies. These are building billion-dollar companies. We have a whole bunch of regional case studies. We have a bunch of different electives that we have just added recently to the program. So the curriculum is continuously evolving and improving and enhancing. And we've had over 600 successful entrepreneurs participate in the case study process to share what they have learned in their journeys. So you get to learn from over 600 very successful entrepreneurs, including people who have bootstrapped their businesses, people who have built billion-dollar businesses, and everything in between across these different categories. So it's a powerful, very, very powerful educational program in its own right. Our methodology is lean, capital-efficient, bootstrap startups. Even if you raise money, you're going to have to validate your business before you will be able to raise money. So we do, teach you the methodology of bootstrapping so that you can get to that validation by putting one foot before the other. You can look at the press page, and we have coverage of 1M1M Premium members. It gives you a flavor of the kind of coverage that we generate. We also give you access to our Twitter, Facebook, and LinkedIn channels, all our social media channels, as well as our blog, through which you can get your message out there. And, social proof and getting your message out there is incredibly important. And small companies have a very hard time getting any attention from the media until you have funding announcements to make. So we help you mitigate and navigate that stage of business building so that you can generate that social proof. We have an affiliate program. If you're interested in partnering with us, we are more than willing to do that. Upcoming free roundtables pretty much every Thursday, all through to the end of October. Vision India 2020 is an ideation book that we have published. There are $45 billion business ideas that apply more to the emerging markets, not just India, but also to all the emerging markets. You're welcome to look at those. 1M Incubator in a Box is our platform that a lot of companies especially are using to build or scale and enhance their own incubation programs. And we do that in various different models. We do that for intrapreneurship, we do that for ecosystem incubation, and so on and so forth. Reminder, From E-Commerce to Web 3.0 is a new Entrepreneur Journeys book that is launching this month, and you are most welcome to check this book out. It's a powerful book that will teach you a lot about how to build e-commerce businesses and simulate the experience of working with 15 very sophisticated, successful entrepreneurs as mentors, and that's powerful. Now we have some time. We have just about 14 minutes of Q&A time left. So if you would like to call in or ask questions in public chat, now is a very good time. So folks, please don't send me private messages. Now is a time for Q&A and engagement, introductions. Introduce yourselves in the public chat. Set your chat to send to all participants, and then go ahead and type in your questions if you like in public chat, or let us know and call in if you would prefer to call in. I have a question that is a private question. Frankie Burke, would you please type in your question in the public chat instead, and I would be happy to answer the question. The question is there a startup life cycle diagram checklist of crucial areas we need to ensure we are covering off when beginning a startup? Yes, there is. We have a checklist. If you look at the Entrepreneur Journeys books, Volume 3 is the positioning book. It has an appendix which has a whole set of questions that you should be checking yourself on. An abridged version of that is our 1M self-assessment. So you could start with the 1M self-assessment as your starting point for this. Anybody else? Any other questions, comments? Introduction. Time to network as well. Is there anyone on the call waiting to speak? No? Nobody has any questions, comments? Let me introduce you to Irina Patterson. If you have questions about joining the 1M program, Irina is your contact. Her phone number is 786-301-2456. Her email is irina@1m1m.com, and her Skype is irina_Patterson. She will be happy to answer any of your questions about the program. And that's pretty much it. By the way, Sarita, Chris Carter is one of our members, actually, premium members, who came in through our partnership with SAP HANA, and is a success story. They have actually crossed $1 million in revenue. So, Sarita, your question is, could you please say more about partnering with 1M? What is the question? You are doing a startup, so you're not going to partner with 1M. You're going to either join the 1M program and become a 1M premium member or not. So what is your question about partnering with 1M? I don't understand the question. We do have partnerships models, incubator in a box and affiliate programs. These are all partnership models that large corporations use to partner with us. Like SAP does have a partnership with us. Oracle has a partnership with us. But I'm not sure I understand your question about partnering with 1M. Daksh, please do not send me private messages. Put in your question in public chat. We don't do anything other than a premium membership fee. So we don't take equity, and we are not interested in being creative about our model. Either you follow our model or not, and if you want to work with us, you have to follow our model. Daksh, you're welcome to type in your question in public chat. If you want to ask your question, you're welcome to. I don't know if I'll be able to answer your question. Legal, I'm not a lawyer, so if you're asking questions about legal issues you're having with a customer, I may not be the best person to ask that question to. You can try it. I will try to answer to the extent I know, and if I don't know the answer, I will tell you that. Anybody else? Any other questions, comments, introductions? Feel free to introduce yourself. All right. I don't see any more questions or comments, so we're going to wrap up and get on. So Frankie Burke is asking, is there a chat room here at 1M1M that we can access during the week? Only for the premium members. There is a discussion area in the premium program that is available all year long, all day long. Anybody else? All right, folks. We'll wrap up then, and look forward to seeing you next time, and hopefully we'll work more with more of you, and hope you enjoyed the show. Bye-bye, everybody.